What the fuck is up, YouTube? Welcome back to another trade recap. Sorry if I yelled a little loud. I don't give a fuck. Turn your volume down. Today's recap is going to be on S&P 500. I did try to trade NQ today, but you'll see that the trade idea did not align with the price action. And only did on SPX. So that's what we're going to be going over, okay? Because that's what I took the trade on. All right. Let's get started, shall we? Now, the first thing I want you to notice is my analysis here was extremely simple. I will actually hide this just to show you how simple it is. And let's go into replay mode. Let's go to Monday. What was this Monday? Like right after here. Boom. Okay. Now you can't see, but above here, there's that -4 standard deviation on the daily, right? We all know this level. If you're in my Discord, you know the level by heart. You know that's what we're targeting. As you saw on Monday, we had quite the move up. We had some extreme bullish action, extreme bullish manipulation. I'm pretty sure it was something to do with the treasury of something. So that had an impact. And as you can see, it was maybe 1 to 3 ticks away from hitting the -4 standard deviation on the day. And that's a big deal. That's a big price level. And you can see that price is looking to go there. Now this is, 4, 6, 7. So this is aftermarket. Nothing to worry about. Now, what I noticed on the, obviously, even if you go on the daily, this is the current day, but if you go to the hourly, you'll notice that the hourly creates an imbalance, and it's from this gap to that gap. It just creates one big ass fucking fair value gap with this manipulation. Usually that gets filled right away, and you'll notice when we unhide this, we stop the replay. What happens is exactly what I said. It was going to fill the gap. As you can see here, we closed basically here. Price closed above here today on Tuesday, but it came down after market. And trust me when I say this, it's going to get filled during Asian and London session. Okay, so without a doubt, this 1 hour PD array obviously got drawn up like this. I drew in yellow, did the consequent encroachment there. And I was looking for price to respect it, and then obviously come down into it from London, Asian to London, and then now New York. Now, a little unexpected. We did have a lot of consolidation happening on the 1 hour, and you can just see right away, like just this pure consolidation. I'll show you on the 5 minute, but this is just pure consolidation. It wants to break out one way or another. Obviously, we have all these engineer liquidity, all these highs up here in the buy side liquidity leg, which I was talking to you about, which is right here, like just a few ticks away. So easily could be easily reachable. But as you saw, we wanted to sell off a little harder. And the reason for that was after making this leg, I'm pretty sure, and this was seen on NQ, but I'm pretty sure there was a discount in premium that was created. I think it was something like this. That's the current range, but it did react off of this. So the range, the new range is this. Okay. So that was the new range. I'm pretty sure NQ, I'm going to go to NQ real quick just to see it. Okay, yeah. So NQ has the bigger range on this. NQ, as you see again on the 1 hour, we have this bigger range here, the premium discount from this buy side liquidity. Whoops. This buy side liquidity all the way to this sell side liquidity. As you can see, price is going all the way down past this internal liquidity, all the way down to that sell side liquidity, if not reaching for lower. But as you can see, NQ's price action is much different than SPX. And those were the same exact chart. You can see that SPX has been extremely bullish, and this little selling action is really not too much because it's really not taking even, it's basically 50% of the whole move, which is really no big deal because if it comes up from this fair value gap, it's not going to be a big deal. Anyways, the trade idea or the bias today, literally all I had on my chart was this fucking yellow fair value gap, and I was waiting for price to come down. As you saw, whoops, on the 1 hour, this is 8 a.m. It comes down. Let's go to the 15 minute, my bad. 15 minute. as you notice, it comes down, what, 7:30, 7:45, 8. Okay, so 8:15 is the important part here because this 15-minute candle tells us a lot. Now, this 15-minute candle tells us a lot. It tells us that it got so close to the consequent encroachment that price will want to take it out later in the day. So what was the overall bias? The overall bias was to be bullish because I want to take a bullish trade all the way up to the standard deviation buy side liquidity leg. But once we saw this, we were now bearish. Now, you might be asking, okay, so if you know you're bearish, why did you take a bullish trade? Well, that's because the setup was there. The setup was there. And the price action after the news was also showing bullish price action. And I believe that the strategy I trade will work during this session. And because we're bearish from this little low, that doesn't mean that the candle right after it has to come down. So again, we can take the whole day. And remember, the only time we closed below this little candle and actually reached for consequent encroachment was at 4:15, which is 4 market closure. So I had the whole day to trade bullish, and then I could trade bearish at 4. Now, I didn't know that was going to happen, so why take the odds? But I'm just showing you that I didn't need to trade bearish price action right when that candle happened. Okay. What I say? 1 hour PD array. Waited for price to come down to the area. Waited and saw NQ and SPX. That's similar price action. So around that area, yes. Until NQ looked weaker, but SPX was stronger pair. So I just picked SPX to trade. Has a bullish model on NQ early, but got stopped out due to news. So I'll show you on NQ. What actually happened on NQ was, let's go to maybe 15-minute. So this was the 1 hour gap, it looks like. Let me just make sure we have that right. No, it was not. No. No, it was not. The 1 hour gap was here. One yellow and the consequent encroachment. And we go to the 1 minute. You can see, where do we do this? I think it's this. Okay. So price on NQ actually comes lower, but you can see there's still a buy model get created here. There's the low that gets created here. There's the market structure shift that I had marked out for it. You can see that, or actually this is kind of like the market structure shift is like right here. But you can see it gets broken up until this candle kind of. Not really the cleanest, but standard deviation. Wait, was this the 1 minute? Wait, I feel like, no, because this got broken up. I feel like there was another swing high. No, okay, yeah, I was tripping. So there wasn't even there was not even a buy model. My bad. So no, my analysis was wrong on this. My bad. So NQ didn't even show this. My bad. So I got tripped up. Let's go back to SPX. Okay, let's just jump in right into it. You can see this tick, this wick comes right down. We know that we want to hit this lower, but now I'm looking for a buy model. As you can see, this is 821. Let's just mark out the 9:30 open. We have news at 10, which I did not want to trade. So we mark this at 10. And then I usually wait maybe 30 to 35 minutes after news. So let's just do 10:30 something, 10:35. Boom. So from 9:30 to 10:40 or 10:35, I did not take a trade. I was not looking to take a trade in this area whatsoever. Now, you might notice if you have some really good fucking eyes, there's a buy model that gets created and the entry gets created before market even opens. Obviously, if you could take the trade, go for it. But I didn't take the trade. I took the trade later. Saw this price model, basically swing low happens here, right? And then from this swing low, you just go up in price. And what's the swing high that gets broken to create the buy model, right? On the 1 minute, it would be this little tiny guy right here. That little guy. But as you can see, what's the first failure gap that gets created? That little tiny thing. Boom. As you can see, price already tapped into that and created the big move, if you will. But this happened at 9:19. So no one could take that trade, obviously. So what I was looking for was a little more, and I looked for a bigger market structure shift. As you can see, one happened here, up here, and that's the one I targeted up here, was because these were equal highs, and then that created that swing high. Mark that big buy model right here. And then what happened? Let me just mark this. Okay. And then 9:30, we shot up in price, obviously, as you saw. Absolutely shot. And then you go from the swing low to the swing high. Cool. You mark your standard deviation. Boom. No, let's just do this one. This one's cleaner anyways. Okay. And then with the OT, right, the swing high happens here. Obviously, you're marking this buy model, but you're not looking to take a trade down here. You're not looking to take a trade here. You're only looking to take a trade after this, or even 5 minutes after. Like, this whole price action from this red line to that red line is an absolute no-go. If you're willing to risk your account trading this, go for it. But I know a lot of people got fucked because of this news candle. And if you were in calls right here, you'd be fucked. So just mark the top, because that's considered a swing high. That is a swing high. You extend it probably out here. Okay. Swing low, swing high, 1 minute model. Okay. Now here's where it gets interesting. Again, this market structure shift is right here. I'm just going to mark it in like big. So bullish displacement away from that level, away from the consequent encroachment. We know we wanted to come back later. But once this showed bullish price action, which is exactly what I'm going to be talking here, comes down. Now, I did say this in my other video. I don't want price to teleport down to my level, but because it's news, it has to teleport. It can't just, chop its way down. But it teleports, but look where it teleports. It teleports right on the OT. And I mean right on the OT. And this is like right after news, 1 minute after news, and it gets bought up. To me, right there and there, that showed extremely bullish price action. That means that all the sellers that were just selling this, basically, if we take the range, I swear to God, I see it with my eyes. This candle is above the consequent encroachment. I promise you. Watch. Consequent encroachment. It's way above. So the buyers bought more than 50% of what the sellers just did. That's bullish. Remember that. Then what does price do again? It comes down, it comes down. Again, you're not trading this, you're just watching. Comes down, it comes down. Gets bought up, right? Because it's in the discount. Gets bought up. Nice wick. Comes all the way down. Hits the OT. Where does it close? Above the OT. Doesn't trade down. Now this is probably the lowest low that you'll go. The lowest low you'll go. Just mark that out. And then what happens? Then you can finally trade on this candle. So we'll delete these. But after this red candle, you can now start trading. So that's why I looked for a buy model, which was already happening on the 1 minute. It was pretty big. I don't really love these big candles or these big models, but once they work, they do. So what did I do? I looked for price to come down again. As you can see, it did sell down again. And in the process, it created more engineered liquidity, which was even better. And if you look really carefully from my entry, basically this whole leg here, this whole leg is engineered liquidity. Now, you might say this high here, equal highs. Obviously, that targeted buy side, and I'll talk about why this was targeted and some other equal highs. So all of these little black lines right there are engineered liquidity. That's liquidity for us to target. This is weak buy side, very weak. and you guessed it, we went up. Now, the entry was not super complicated. It was most definitely risky. If you were a beginner trader, I was definitely shitting my pants during this, but you can see that price comes down, taps the consequent encroachment here after our 1035, taps the OT, my bad. I enter here. Now the option was probably like up here or some shit, to be honest, but I like to mark it here. And the stop loss. Now, the reason why I didn't have my stop loss here was because this is not only super tight, it's a very tight stop loss. Like that's a 2 candle stop loss right there. And that's because we had another, 2 fair value gaps, but 2 other fair value gaps here that could be filled. So I just said, okay, you know what? Fuck it. I'll just put my stop loss right here in the consequent encroachment of this fair value gap. I'm pretty sure I moved it up here, but consequent encroachment of this first fair value gap here that gets created off this big move. Just if price wants to tap back into some kind of array here in the middle of the OT, which is far probable because this OT is lined up with that, with the consequent encroachment of this fair value gap. Absolute, that would be fine for me to do. So I didn't want my stop loss to be before. Okay. That's why my stop loss is so low down there. Other than that, you can see that we hate take profit. Like take profit here is one gets taken out right away. So that's a plus. And the final target. Now the final target, you might say, oh, but French, you're always targeting negative 2.25. Why the negative 2.5 today? Well, it's very simple. You remember where we drew our OT, that swing high? You mind telling me where that swing high ended up? Yeah, right here. Let me put this a little bigger. There. That swing high that created this whole move, and then where we entered back here, right? Already tapped into the negative 2.5 or negative 2, negative 2.5 range. And it went above our price target. So when we are in a trade, we would target the negative 2.25. But because it already went there, and it went so close, literally a tick away, half a tick away to the negative 2.5, I was confident that if we took calls and we took a buy model and we took all this engineered liquidity, that the obvious price point would be this high and would be the negative 2.5, right? Look how, like in one candle, it takes it out. That's how obvious it was, right? With experience, this comes with experience. You'll learn this very easily, but this is experience. As you can see, I did not target up here. I just didn't. Okay. Now I could, obviously would get taken out because I would have taken partials and I would have taken my full take profit, or not full take profit, but if I still had a runner, I'd have my whole position out by the negative 2.5. That's just strategy I built. That's what works for me. That works best for me. So personally, my only runner would be left to negative 2.5. I would be risk-free. My stop loss would be consequent encroachment in the premium discount, whatever. And it would make sense. Okay. That's where I would have my stop loss. And that's just with experience. As you can see, the price does trade a little higher. I'm not too worried about this price action. I'm out of the trade and it comes down, takes all this stops down here. And it does, come down here. Not, look, not quite to the consequent encroachment on the 1 hour early. You might think, oh, this one's the move. Not quite. I watched this live again. This was like right after lunch. We kind of consolidated and then we kind of came up on SPX and NQ. SPX really broke above those highs that we made here and reached almost here. And I did call out in the Discord, like after these highs were made, I'm like, oh yeah, wait to target that -4 standard deviation leg. Unfortunately, we got this move right after I called it. But I was getting excited when this price came all the way up here. Pretty sure this was the -3, where is it? Full standard deviation. Yeah, right on the dot. -3 was right here. -3 standard deviation was lined up right there. As you can see, I'm not calling it on the tick, but that's where it closed under. So I'm pretty happy with that. And as you can see, from this move up, right, manipulation up to grab all that liquidity or whatever orders were above here to come all the way down and finally reach our consequent encroachment and fully almost sweep it. We will sweep it tonight. Okay. Very basic trade. And guess what? Look, you're going to see traders taking 45 fucking trades a day. To me, Trading is 1 trade a day. If I can do 2, dude, that's fine. But you got to understand, I've risked my money so many times that I understand that if the setup isn't there and I didn't take it, then I don't need to take another one. I could be done for the day after 1 setup, after 1 trade. Even if the trade is like the smallest you've ever seen, it is still considered a trade. It is still considered, you can still take notes, you can still learn from it. It's still considered a trade. So today happened. Maybe I had the order flow wrong. As you can see, I'm kind of impressed because this was just back and forth, right? Up, down, up, down, until we finally broke out. But the only time we broke out of this fully consolidating range was market closure. So you can see I somehow traded during consolidation, and that's extremely risky too. So I'm happy. I noticed that there was consolidation. I noticed there was a bunch of things wrong with the order flow, and I just did not want to get involved in any more losses. So I was like, I'm done for the day, and we're done. All right. And we're going to be done with this video. I'll see you guys tomorrow or very soon. Peace.